This is Asanda. She has a brilliant business idea, selling teddy bears. And so, with 40,000 Rand in her bank account, she starts a company called Sandy Bears. Financial experts call this money equity, which is all the monetary resources that the legal owner of a company invests into the business and what it retains as profits at the end of the year. With this money, she buys a building to produce the teddies and a machine to make them. All these resources owned by the company are called assets. Other resources include cash, investments acquired, some patents she created, and so on. They make sure the company is able to operate. But soon, Asanda realizes she needs many more assets than what she can afford. So she decides to go to the bank and request a loan of 60,000 Rand. Loans are part of the liabilities that a company can contain. A liability is the company's financial debt or obligations that arise during the course of its business operations. Let us now look at Asanda's balance sheet. The balance sheet reports rand amounts of a company's assets, liability, and equity at a specific point in time. We can easily see that the value of Asanda's assets equal the sum of her liabilities and her equity. This relationship is called the accounting equation and holds for every company irrespective of how it operates. But what does it imply? Firstly, it tells us how much Asanda owns after subtracting the company's liabilities from all its assets. This tells her if her business is growing from year to year. By rewriting the accounting equations, stakeholders can now easily see how healthy Asanda's company is by showing how assets are financed, which part is paid from the owner's equity, and which part is externally financed, liabilities. The accounting equation is the foundation of the double-entry bookkeeping system, which means that for every transaction Asanda's business is involved in, the balance sheet will always remain in balance. If, for example, she sells a machine for cash, one asset account is reduced, machines, and another asset account is increased by the same amount, cash. Or if she buys another machine through a loan, the asset position machine will be increased by the same amount that the liability position loan is increased. As a result, the accounting equation remains equal. Asanda is happy. The accounting equation helps her to record, check on, and interpret the business transactions that are happening every day.